So let's take a look at this. Go ahead and put this up on the screen. So we have this idea that, they're not able to cash in. The shareholders and the executives are completely wiped out. Okay, well, before the collapse, it turns out executives were selling shares and at quite a rapid clip here. This is from Unusual Whales. It's actually in response to that Mitt Romney tweet that we put up before. And they say, Mitt, this may interest you. Before the collapse, executives sold shares. Gregory Becker, the CEO, sold 11% of his shares on February 27th. Michael Zucker, who was their general counsel, 19%. Daniel Beck, the CFO, 32%. Michelle Draper, the CMO, 25%. So when you hear people saying, well, the executives management got completely wiped out, well, they took their gains and locked them in before the thing collapsed. So they're going to be just fine. Yep. Not only that, put this next piece up on the screen from CNBC. Silicon Valley Bank employees received bonuses literally hours before the government takeover. Now, I've seen a lot of people say, oh, well, this was from work that they did in 2022, et cetera. Okay, come on. Hours before the government takes over, you're doling out cash bonuses, which again could be going to those depositors to help make them whole. No, okay. Got one more for you though, and we had David Sirota do a piece on this over the weekend because I thought it was so important, but I want to make sure that we highlight this for you as well because this is as key a part of the story as anything else. Put this up on the screen. Silicon Valley Bank, their chief actually pressed lawmakers to weaken bank risk regulations. This was under the Trump administration. You had, I think, every Republican and something like 16 or 17 Democrats, 12, 60, 17, I've got the numbers here, let me see, vote for this as well. But effectively, the head of Silicon Valley Bank, one of the guys who just cashed in on his shares before the bank collapsed, he went and pushed legislators to exempt more banks, including his own, from new regulations that were passed under Dodd-Frank in reaction to the 2008 financial crisis. And by the way, it was successful. So the fact that they got these regulations loosened meant that they were not subject to the same level of stress tests that they would have been otherwise. He argued that SVB's deep understanding of the markets that they serve and their strong risk management practices would lead to them being just fine. They said without changing the regulations, SVB would need to divert significant resources, providing financing to job-creating companies in the innovation economy to complying with enhanced prudential standards and other requirements. Quote, given the low risk profile of our activities and business model, such a result would stifle our ability to provide credit to our clients without any meaningful corresponding reduction in risk. So he argued, we're totally risk-free. We've got deep knowledge of this industry. We're good to go. We don't need all these stress tests. It was successful, supported here with 50 Republicans and 17 Democrats. And they faced, because of that, fewer stress tests and other regulations than they otherwise would have been required to face.
Yeah, so they weren't even on the troubled bank list, so the FDIC didn't have full visibility into their books. Not only that, but the SVB CEO was actually on the board of the Federal Reserve Bank of San Francisco. He had to resign after the immediate collapse of his own bank. This was a deeply connected person. I'm rereading the Too Big to Fail book right now by Andrew Ross Sorkin, I think it was written in 2009, just a recap of everything that happened in 2008. And it's like, it all rhymes. It's all the same. Yeah. Like all these guys were deeply interconnected. They had the cell phones of Hank Paulson and of Tim Geithner, and the financial system stepped in immediately to broker deals to save them. In their view, they were saving the economy, and in many people's view, they were saving themselves and saving their bonuses and 401ks. But here's the thing, like, at the end of the day, the idea that these people were able to dole out, and in some cases, we're talking here about $140,000 in bonuses per employee, some $20,000 bonuses for lower level. Who knows what the management was given? Now, was it given in cash or in stock? If it was given in cash, every single one of those things needs to get paid back. Sorry. I mean, it's impossible, the idea that you can just be doling out cash at the end. That's like the story of Bernie Madoff, who was giving out $100 million bonuses on the very last day before he was about to turn himself into the feds because he wanted to make sure he could dispel all this cash before he was going to go into jail. All of their behavior lines up. You're really going to tell me the 2022 bonus had to be processed on the very day of the failure. You're really going to sit here and say that you didn't know that the bank was in serious trouble when you were selling up to 32% of all your stock holdings in the company, because that's the vast majority of your comp? That's hard-earned cash, which was pocketed from investors into your pocket, of which you then are now saying, oh, woe is me, I had no idea that it was all coming. This is corruption, pure and simple. The FDIC example you gave is a good one. And I just think, also in the future, this is going to be the main fight. Sure, the FDIC rate can go up for the banks. I don't even think that's a bad thing. But they cannot raise rates on the rest of us. And also, if you think about it, with the liquidity crunch now that is happening here, we got a debt ceiling crisis, which is looming. Our economy is in serious trouble right now. In terms of getting probably closer to a debt ceiling crunch, just because of how much money this might spend if taxpayer dollars do go on the hook. And second, the precarity right now of the financial system, already with the lead up to this debt crisis, this has put us in a much worse spot.
There was a lot of theorizing that I saw on Twitter that, this all just became political because of the name of the bank, and Silicon Valley has become this kind of boogeyman, whatever. If this had been called Farmers Bank, it would have been no problem. I think it is the polar opposite. The fact that you had so many wealthy and well-connected individuals tied into both parties, deeply into the financial banking system, some of the most powerful people in the country and really in the world, that led them to react way faster, and it allowed them to be persuaded that, they have to do this and they have to backstop the entire system, or else there's going to be complete calamity. I have not been persuaded of that case, and this is also the siren song that they always sing, that, we have to do the bailouts because there's no other choice, otherwise there's going to be complete economic calamity. So I'm a little bit skeptical of that case being made, given that we have seen it before in the past to people's individual and personal benefit.
Yeah, I think you are exactly correct.
Hey guys, ready or not, 2024 is fully upon us now, and Saagar and I have been brainstorming ways that we can really up our game for this critical election.
Yeah, we rely on our premium subs to expand our coverage, to add staff, to upgrade the studio. We just want to give you the best independent coverage of this election, which is possible. So if you can help us out, become a premium subscriber today, breakingpoints.com, or the link is down here in the description video. It really means the world to us, and if you like what we're all about, this is the best possible way to keep us 100% independent, working only for you.